Weekly update of the U.S. stock market, 8:59 a.m. Eastern Time, June 8th. I'm Rich Paz for Critical Point. All right, you're looking at the hourly S&P 500 chart. Let us not forget this gap here. I'm sure it's significant for some. The market is debating, does it need to go down to that and then up? Bulls would be thinking that. Bears would be thinking that. Bears, of course, would be hopeful that it goes down to fill a gap and just keeps on going. That gets a renewed round of supply, a fresh batch of bearish news. Notice how well the market's been hesitating. So if it trades above the high of the year here at 99.28, I think it's going to run for the August high of last year at 43.25. And that should be the final piece of bullish evidence price-wise anyone needs that we're in a long-term bull market. Now, they may immediately sell and pull it back, and it may be stagnant and stall out for a while, but Albany is probably going higher later in the year. Any rate, trade below yesterday's low here, what is it, 4263.96 means they're still trying to attempt to put it down there. But since it's this oversold, the modeling is suggesting they may not fill the gap. They may push it some, and if it goes up, they may become more excited, saying there's simply not enough supply. The market does not have enough to get it down to fill that gap. Just be bullish, and they may want to run with it. Okay, for their intraday chart, due for level 4 bottom overnight. It may show up early this morning. It ought to rally. Now, level 4 is just intra-week swings, and sometimes they're just the most important swing during a day. They're just day trading. So we're looking for just pops and drops, and it's saying it ought to pop today. The problem is it's going to be back down tomorrow to finish the week off, okay? And we can also delay it into the start of next week. It's not really giving us this warm, fuzzy feeling that it's all that bullish, that there's a lot of upside here. I would be concerned if it takes out the low at 4262.75 on the futures. They're going to try to push it down to 4250, try to push it towards that gap in the 4240s to 4220s on the cash market. And the futures would be just a little bit above that. However, as it is oversold on an intraday basis, so maybe there's more upside than we think. And if it starts pushing through 4300, it may be a sign it's more bullish than we think now into tomorrow. Maybe it's not going to work that well for the downside. And the model is warning there's a potential here for a level 3 bottom, something more important. So give the bulls a chance, but if it takes out that low I just mentioned, then we have to consider a little more stalling out here over the next couple of days. Daily chart, this is fascinating. Look at this. Rallied right up to our price target and they sold it. Pulled it back, rallied it up, touched it again, and sold it. This is what's called a double top. And by those candle bodies, you can just see this was right in here, the real supply demand. This was the fuzziness where, yeah, they bought it, but boy, there was anxious sellers just really ready to unload on it. If it can take out that double top, I think it's going to get them quite bullish, and they're going to want to run it up to the next price level of 43.26, or in other words, the August high of last year at about 43.25. All right, and then if they can push it below that, above that, it may go up to 43.55. I'm not convinced it can do this in the next few days, but I'm convinced it can accomplish the next couple of weeks here. Now, however, if it trades below the low of 2 days ago at 42.63.09, then they are still trying to push it down to fill this gap in the 42.40s to 42.20 area. Notice the 5-day moving average and the 5-day McGinley dynamic, which is something like an average. They're bullish acting, and it could be a floor price as of yesterday. But will that floor price be violated today or this week? At any rate, the 5-day stochastic here is rolling over 532 slow. It's just telling us at least the technical crowd is turning bearish. It's telling us the market's a little ahead of itself, overbought. It needs to set back some. It was making a sell signal by the end yesterday. So will it follow through? And we don't know. We've got a variety of scenarios here when it comes to this level 3 fluctuation. So you should have an understanding. Yes, there could be potential downside to 42.40s to 42.20s. We think that's about it. But there's also potential upside to 43.25. And the market's trying to figure out what should it do first, and will it cancel one of those and forget about it a long time, especially on the downside? It may cancel it forever. All right, so here's our best scenario. Our best scenario, and this is the futures, but it's now with all the model analysis, where it moved up and even struck the level or close to it for a top for the futures even. level 3 top. It's moving into a level 3 bottom, perhaps as of today. This may well be a buy when the market's going to rally through next week into the following week for the next level 3 top. The problem is we've got some alternate scenarios when the market may even bounce tomorrow and kind of sucker us into that and then down into a level 3 bottom next week, not this week. We've also got a scenario when it might actually make a new high for the year going into early next week and still drop next week for level 3. We don't know, but see this here? This could be a level 3 downtrend, but just realize it may extend lower into next week, or we get a move up, and then you take this and just apply it next week. The downtrend is either this week or next week, and we don't know which it is. But it does get clearer when we look out 2 weeks on into July. It's saying don't get too excited about these level 3s. There may not be much downside at all. The worst may be going down to fill that gap in the 42.40s to 42.20s on the cash, and that's it. Focus more on the larger trend that's likely up. Okay? So I think instead of worrying if it wants to go to a new high for the year in just the next couple of days, instead of worrying that it will set back a sizable amount for level 3 next week, I think I'd err on the side it's just going to keep going up. Okay? So we're calling a level 3 top in place as the best scenario, even though we got lower probability, lower confidence, alternate scenarios. And we're saying there's a good chance it bottoms today. So kind of relate that to the daily news. What could go for us or against us on this? All right. Now, there is some issues over in the interest rate market that's bothering this market. I also think that by coincidence or not, there's issues of all the smoke coming out of Quebec, Canada, down into all the way into Virginia, maybe Washington, D.C., at least to Pennsylvania, and we've got it in New York. I mean, it's even dimmed the sun, okay? And we've had to wear masks. And a lot of people are working from home, and it's interesting. Hey, New York is still the big trading hub of stocks, even though really the greater population is around the world and, of course, in the U.S. Any rate, let's see if they can. The bulls can get it going here today. I just want to warn you, it's fuzzy. It may be down today. It may be down into next week. But ultimately, it's looking constructive so far, okay? I think we just got to give the bulls a chance. Now, let's move to the weekly chart, and I'll go with the S&P 500 cash first. So I really love this chart. For some reason, it looks better in the futures, and they're both about the same. Yes, looking like a negative week reversal week. That's fine. We already know we can run into a little hiccup here with this level 3 this week and or next week. And yet it can still go higher for the larger level 2 trend, higher into July. And for the larger level 1 trend, higher into July. And another leg of the long-term bull market from October into July. But the bull market is going higher into next year. One type of bull market, another type of bull market is going higher for this decade. So plenty of upside potential. It's already met the minimum of this objective. We think it still goes to 43.25, which is within an objective range. Since it's already met the minimum objective ahead of schedule, the model is saying favor the higher of this objective range, and therefore increasing the odds to see 43.25 or higher. But also consider maybe it wants to go to 44.25 by July, if not higher. Okay, this dashed line is our best guess of fair valued fundamentals during the year and during the minor long-term business cycle into next year that's bullish. The market should trade above and below that at times, and because we're in a bull market, it should trade higher than, move up more above that line than drop below it, and it also should spend more time above it than below it. And we think we're right, and we think the line has worked very well in the past to tell us of fundamentals. We're going to see better news or less bearish news to create a better bias or net bullish scenario. Now, it is overbought on a weekly indicator, warning it might be limited upside. It's warning of a coming top, but the model is suggesting it still ought to rally about 4 weeks or longer here. We're going to get zigzags. We may get some disappointments. They may slam it down towards 4,200, fill that gap, put it right back up. It may be a more drawn out process, stalling, boring, but ultimately ought to move higher. My vote is this is going to be exciting and strong market. So trade above last week's or this week's high, 4298.28. I think is a bullish scenario. They might really pick up the pace. All right. Something else to consider would be the percent stocks of the S&P 500, of the 500 stocks above the 200-day average. And look at this, picked up the pace as it should have. It's bullish, okay? And they're putting money in. They're buying stocks and they're shoving them above the 200-day average. That's a technical bullish signal that basically just reflects improving demand. Weekly indicators suggesting statistically of this indicator, there's still a chance of lingering money pouring into the market, building up those stocks, pushing that above. And we do need some better breadth here. It is a small group of stocks than pushing the market higher, and it is the NASDAQ more than the S&P 500 that's pushing the market higher. Now, this is the S&P 500 futures. Same story. It could be down this week, then up next week. It could be down into next week, then up. It may pop into next week, pull back. We don't know. It's a little bit cloudy this week or next. But overall, it ought to go higher and higher to these higher objectives because it's already met the minimum objectives ahead of schedule. We've just got to be bullish into July, maybe even the start of August. But we will consider that sometime in late July and August, the market is going to set back some. And then it's probably going to be up by September, and then we'll have to be concerned with September, October seasonal selling that we think will be minimal. And then it's going to be right back up by the end of the year, November, December, which actually can be some of the better months of the year when looking back of the history over 100 years or so. We think we're going to finish with a good note here, a positive note, optimism by the end of the year when we may see 45, 46, 47, maybe 4,800 in the S&P 500. Okay. Weekly indicator is overbought, trying to roll over for a sell signal. We think it's a hesitation, and we think we're going to see more false sell signals now into next year because of this minor long-term bull market. It's just how it works. It's going to spend a little more time overbought and refusing to really sell off. It's also going to be reflective of improving news, economic conditions, fundamentals. The 5-week average is spreading. It's looking bullish to us. And it's nearby support. If they want to knock it that low, we do not believe they will actually knock it that low. We want to give it a bullish scenario. Any rate, trade above the high of this week of 4305.75 in the futures should mean higher prices still in coming weeks, and it should mean the cash market makes an attack at that 43.25 level. All right, now let's move on to the now on the ratio side, the Russell 2000 has picked up the pace relative to the S&P 500. It shows a monthly reversal higher after an extreme low. It may be that some of the small cap stocks, the Russell 2000 stocks, might make him more money than the S&P 500. It could do well this year, but we're not big fans of that. We're not necessarily that good at forecasting that kind of thing, but it is something to consider. Meanwhile, we also think that even though the NASDAQ may be the strongest this decade, maybe the stronger going into next year, there ought to be setbacks of chilling out a little bit, allowing the S&P 500 at least have brief moments of doing better than the NASDAQ. And we think we're getting close to that kind of setup, but it may be the NASDAQ's going to be the leader for some time. And some of this has to do with this AI betting, which unfortunately by late this decade may turn out to be a bubble like a .com of the early 2000s, but I seriously doubt it. I doubt it that it's a bubble today. We may be building into it, but I think it's going to take a lot longer than what people think, okay? Or it's just not going to be that serious of a bubble. But I do think they're getting a little ahead of themselves. But I'm now seeing some major analysts coming out there saying, you know what? Maybe it's time for the S&P 500 to catch up with the NASDAQ. It can improve and do better. And there's also an increasing number of people starting to target 4,600 now. There's people who are already targeting 4,600 saying this AI development really was not on their radar, but they're saying they'll just use that as a substitute, flip it around, and still stay with 4,600, but they now have a more detailed picture, including the AI. Others, on the other hand, are adding AI on top of their picture and now wondering, should they bump it above 4,600 to 47, 4,800? Well, I'm not so sure of doing that for this year, but I'm certainly willing to do that next year. Okay, let's go to the monthly chart and check on the VIX because, people love to worship the VIX here. And look at this, it's breaking down. What this is telling us is very few are betting on the downside now. Very few are hedging, protecting their purchases and stocks. They're not paying for insurance to protect on the downside. Why is that? They think it's finally over for the bear market last year. They think fixing this debt ceiling and shoving it all the way into late 2024 or whatever it is going to reduce all the political issues. I think we can start forgetting what's going on politically for the stock market directly, and it never was that important to begin with in the modeling. But I also think it just makes it more social issues that become very long-term subtle impacts on the stock market this decade, okay? And I also think this means a greater focus on where are we going for business-wise and economy. And even though there's some issues that could still bring us into recession, I'm still staying my forecast of no recession. And there are an increasing number of people saying no recession, a very slight recession, or a rolling recession, and they're basically turning bullish the stock market. Now, that doesn't mean the VIX isn't low enough to have some spikes, but what I think is the VIX is lower into next year, not actually lower, but now more sideways. It's going to be very difficult to spike this to 30 to scare people. That may begin next year, okay, but not this year into next year, so it's probably later next year. This should be bullish. It's telling us they are in a bullish mood. Now, for the S&P 500 monthly, this is the futures is starting to break through that trend line of resistance. Eventually, we think we're going to get some sustainability. It just moves higher into next year. The interesting thing is when we go to the cash market, this is the trend line of resistance, and the market is well below it. It's well behind the futures. A bit odd. I don't know what to really think of that. But we've got some work to do to get it back up there. We've got to get it above 44.36, and we've got to keep it going here. Is this market suddenly going to speed up to catch up with the futures maybe? And to catch up with the NASDAQ? Can we possibly have a melt up? We don't know. Will this trend line be problematic for a long time? Is it going to be a slow struggle? We don't know, but we're feeling bullish, okay? Now, for foreign stocks, Italy, we think, wakes up here. It may be a struggle now, but we're still positive into the late this year. Doesn't have to be bullish in the next year like the U.S., but it could be. This is Germany. It may peak out late this year, but it could be bullish in the next year like the U.S. The India index, Sensex, we're just flat out bullish into next year. France, the CAC, it may run into problems. It may top out late this year, but it's likely going higher in the next year with the U.S. And it's fascinating. The socialistic, capitalistic, free market countries can do better than what the anti-socialists think. And it can actually do better here into next year with the U.S. But it may be time for the U.S. to return to being the leader to the upside relative to Europe. And I'm going to say the same for Asia and Brazil and South America and so forth. I think Canada is a bit sluggish, but I think it's going to wake up. China, I think, is going to be sluggish for a long time, have some problems, but I think its economy approves latter half this decade to be okay. It's not going to be much of a hindrance. I think Japan, look at that, fantastic, up and away. I love it. I'm showing it topping out late this year. I think it's probably going to be supported into next year along with the U.S., but it's doing very well, leading the way. But again, the U.S. may eventually pick up the pace here and beat Japan. And Japan could be rather sluggish next year, but firm as it waits on the U.S. to rally into a top maybe next year. This is South Korea waking up here. It should go higher into next year, at least into the end of this year, but I think higher. And I think for those, I still like Spain and Portugal. I think they're going to improve here. The New York Stock Exchange Composite, I was disappointed after being so strong last year and taking out the August high of this year, taking out that August high and then backing off so much. But I think it's going to wake up and do better here. And now let's go touch base on some of the outside markets here. Okay. And in the outside markets, we have the dollar index. And the dollar index should roll over and move lower in coming weeks. But I think it's probably going to be range bound, not go that much lower, but can't go much higher. It's going to take a while, but it's rather constructive for our economy. and it is supportive and constructive for a higher stock market. The gold market may be supportive here. It ought to go lower for a few weeks, bounce a little bit. I think it's bearish into 2025, but it may be supported during summer months. It may even surprise us and spike this summer and then down. There's some conflicting things, but I think it's, for the most part, it's over and done with for gold to the upside. On a long-term basis, it just may not be ready to start any kind of a serious bear market. Now, the Bitcoin's probably going to try to rally in the next few weeks, have a little sympathetic trade for the stock market, but it has its own issues with cryptocurrency and the anti-cryptocurrency things that are going on. Don't know how much to trust that. We still want to be long-term bullish, but I don't think it's going to be a great bull market, and it's meaningless to the stock market. Crude oil is likely to bounce here for a couple of weeks and then down. We think it's more range bound, but it can have an upward bias in summer and back off, and may have an upward bias in the next year, but we don't see massive upruns in the crude oil market here, and the market really hasn't paid much attention to Saudi Arabia cutting back when the rest of OPEC didn't, and it's really just hoping to provide a support price. And I think even the producers are happy with this price. They just don't want to see it lower, and they're going to try to rig the system if they can to keep it from going lower. But I don't think they particularly care about making it much higher unless they're trying to be political, and Saudi Arabia would like to be political here with the U.S., okay? And then here's that NASDAQ SP 500 ratio. It seems to be a bit overdone here. It really ought to back off a little, suggesting the S&P 500 may be able to outperform the NASDAQ. But is that because the S&P drops less than the NASDAQ drops and something goes wrong for us in our forecast, or does it actually go higher? Any rate, now let's move on to the interest rates, which of course is a significant driver of the dollar. It's rebounded as we refinance the government, get back to paying bills. I think it tops for level 3. I don't think it takes out the high May 26th, and I think that's a more important level 2. And I think it gets back to business of pulling down for level 2, but I don't think it's going to pull back huge amounts, be that impressive. We're coming up on inflation reports here. I think we're going to see, the last report was 4.9. I think it's going to drop to 4.9. And this month's report, I think next month it drops to 4.5. I think the following month it's dropping to below, 4.5 next month, then 4 the following month, if not 3.8. And the daily number's already down to 2.8. I think this year we get it below 3%. We become more confident going near 2%. The Federal Reserve eases rates maybe to help out boosting the economy by additional amount. I think the economy will be doing well next year, and the stock market very well. And I'm staying with the forecast of a rising stock market into July, also for this year, but with fluctuations and setbacks and scares, but less of them, or if they are serious downside, they're going to be very brief and are going to be by the dip moments. We're going to get those those PMI indicators above 50 eventually and showing a growing economy. I think by some measurements we're there, but and the GDP is going to improve. Past results are not necessarily indicative of future results. Again, a little wishy-washy this week, next, but we're going higher for the month. We're going higher into July. Thank you.